Hey everyone, welcome back to Corporate Decoder. Today CVM just filed an 8K talking about selling more stock, and I am seeing a couple of things that might make you pause. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is selling stock to raise money, which is pretty common, but the devil is often in the details of these deals. So CEL-SCI Corporation, a company that works in healthcare and biotechnology, has filed this report called an 8. This is basically a public announcement for big news that isn't part of their regular financial reports. The main event here is about a deal they made on May 11, 2026. They entered into an agreement with a company called ThinkEquity LLC. ThinkEquity is acting as a placement agent, which means they help sell securities like stocks to investors. In this case, CEL-SCI agreed to sell 6 million shares of their common stock. The price for each of these shares was set at $1.2. This stock sale, or offering as they call it, actually wrapped up a couple of days later on May 13, 2026. From this sale, CLE brought in a total of $7.2 million before they paid any fees or expenses. What are they going to do with this money? They plan to use it to keep developing their product called Multikine, and also for general business operations and to have enough cash on hand for day-to-day needs. It is important to note that these shares were sold under a registration statement that was already approved by the Securities and Exchange Commission, or CC. This means they told the C exactly what they were doing and why, and the CC gave them the go. Ahead, the final prospectus, which is a detailed document about the offering, was also dated May 11, 2026. Now let's talk about the cost of this deal. CEL-SCI had to pay the placement agent, ThinkEquity, a fee. This fee was 7.0% of the total money raised, which is $7.2 million. So that is a pretty significant chunk. They also agreed to cover certain expenses for the placement agent up to $150,000 on top of that. The company made a promise not to issue any more stock or similar securities for a month starting May 13th. Though there are some exceptions to this rule. Here is something else that is pretty standard but worth noting. The company's own directors and top managers also agreed not to sell their own shares for 45 days starting May 11th. This is often done to try and keep the stock price stable right after an offering. Beyond the stock sale details, the filing also mentions press releases. The company put out one on May 11th announcing the pricing of the offering, and another on May 13th announcing that the offering was successfully completed. Like most company filings, this one includes a section on forward-looking statements. This is basically a disclaimer saying that their future predictions might not turn out exactly as planned. They mention that actual results could be quite different from what they expect. They advise investors to look at their other filings, like their annual report, for more information on the risks and uncertainties involved. This is pretty standard legal language, but a good reminder that the future is never guaranteed. Now let's weave in some of the recent news in context around CEL-SCI. We see headlines from May 14th about CEL-SCI partnering with Amarok's for Multikine in Saudi Arabia. This is interesting because it suggests they are actively seeking global collaborations to advance their product. Also on May 14th, there were reports that the CEO Geert Kirsten bought $119,000 worth of the company's common stock. This is known as a director's or officer's purchase. When insiders buy stock, it can sometimes be seen as a vote of confidence in the company's future. However, just a couple of days before this filing on May 12th, there was a headline asking, "Why did CEL-SCI stock plunge after its latest offering?" This suggests that the market may not have reacted positively to the news of the stock sale. Or perhaps other factors contributed to a price drop. This is a key point. While the company is raising capital, the stock price seems to be reacting negatively. This often happens when a company needs cash and sells a lot of new shares, which can dilute the value of existing shares. Looking at the institutional ownership, we see that Vanguard Capital Management LLC is the largest holder with about 2.9% of the shares. Other large holders include My Capital Management and Geode Capital Management. This indicates that some larger, more professional investors are involved with the company. Let's think about what this all means. CEL-SCI is raising money which is necessary for developing its products, especially Multikine. The fact that the CEO bought stock is a positive signal from an insider. However, the stock price drop after the offering is a red flag. It suggests that investors might be concerned about the dilution of their shares or the company's immediate prospects. Historically, when companies need to conduct public offerings like this, especially smaller ones with a market cap around $19 million, it can put pressure on the stock price. For instance, companies that have had to do multiple heavily dilutive offerings often struggle to regain investor confidence. What I'm actually looking for is signs that this new capital will translate into significant progress with Multikine. and if that progress can overcome the dilution concerns for shareholders. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.